Joining us now to break down the numbers, Bernie McTernan from Rosenblatt Securities and Jim Stewart from the New York Times. Very good afternoon to you both. Thanks for joining us. Bernie, I'll come to you on the core numbers first. Initially, shares moved down, then up. What's your key takeaway?
Yeah, so it was a beat on the quarter, and as you guys mentioned, margins were higher, especially on cable net. So that's one thing that we're looking for, is if it was mainly driven by sports rights, and that so then the September quarter would then pick back up. We're also looking for commentary on the call on Disney Plus subscribers. So we have the 100 million aggregate subscribers, but really how they paced after the quarter's end, notably because Hamilton came out in the beginning of July.
July 3rd. Yeah, Jim Stewart, what's your take on Disney Plus, how it's doing from its launch and where it sits against its competitors?
Well, it's obviously a key element to the Disney future because a lot of the things about these earnings are, specific to the pandemic and they are going to go away. But Disney Plus is their decades-long investment in the future of the company. I think these numbers look pretty good, but I agree. I'm hearing anecdotally that there has been a lot of subscriber growth in July. They had Hamilton, they had the Beyonce concert video. A lot of adults are moving towards it. I mean, I think they've got all the families with kids, but if the Plus part of Disney can really come in and they start drawing in a non-traditional Disney customer, I think that'll be very, very positive. So I would love to hear them address that issue in addition to the sheer numbers, because adult growth is ultimately going to vastly expand their addressable market.
Bernie, talk to us about that cable number, because it sort of sums up their headline number for the entire business, which was that a beat on the bottom line, but a miss on the top line. And what does that imply for the rest of this year?
Yeah, certainly. And so cord cutting and media network subscribers is something that we're laser focused on. We think cord cutting is going to be accelerating during the pandemic. So that's why, the top line expectations are what matters, and that's where it's going to get hit. And so what I was mentioning before about sports network costs, well, obviously the NBA and the MLB weren't happening in the June quarter, but they are happening in the September quarter. So that's why when Christine gives her puts and takes about what's happening next quarter, really interested to see if there's a greater, just the amortization of sports right costs get moved from the June quarter into the September quarter.
Jim, what would you want to hear from Mr. Chapek on the call?
Well, I definitely want to hear more about the ESPN situation. Again, let's face it, parks are terrible, but they're going to come back big. Studio entertainment, that's going to come back when there's a vaccine. ESPN, is that ever going to come back? Honestly, it did a little better than I expected. I thought there'd be more cord cutting this quarter and even lower revenue than there is. And the danger is that some of those people may never come back once they're out of the habit of watching on cable. And there's, the big question for Disney is ultimately, do they have to move ESPN to direct to consumer? I think most people think long term, they're going to have to find a way of making that tradition. Meanwhile, they're trying to milk the old cable model. The question is, how long can that go on? So I would like to hear him address the dynamics of that cable strategy and the subscriber status and ad status for ESPN.
I just want to hear how many people are going to Disney World and what that experience is like. Bernie McTernan, thank you. Jim Stewart, always good to talk to you.